All right, hello and welcome to Camel Finance. I'm your boy Camel, and just before we get into today, I want to say thank you to everyone because we're nearly at 1,000 subscribers. When we got to 500 subscribers, I did an OG shout out. So if you are here at 1,000 subscribers, if you're here before 1,000 subscribers, I've got a list already of the people that have supported the channel the most. But if you want to be included because you are here before 1,000, then throw something down in the comments and I'll make sure I add you to the list. The OGs that were here before 500 subscribers will be upgraded to triple OG status. So like I said, if you want to make sure you're included, if you're one of these people that normally keeps quiet and just watches the content, because I know there's a few of those, make sure you make some kind of statement today in the comment section and I will put you on the OG list. Notice in the mainstream media and all over social media, we have the current narrative for the dip. Bitcoin slides after the network congestion leads to Binance briefly halting withdrawals. And I put this out yesterday. I said, look, it's funny how often I say this. Every dip has its narrative, right? Right now, Bitcoin is dipping and the narrative is network congestion, meme coins, Binance FUD. But the Camel crew knew this dip was coming this week and we've known for a while. Why? Because we have this awareness, because we have this alpha of the 60-day Bitcoin cycle. 60-day cycles continue to provide a great edge. They continue to provide context to let us know whether or not we should be respecting certain price action or whether we should be open to seeing dips coming up. So Bitcoin does indeed look to be putting in a cycle low at the moment. We're just waiting to see that reversal. I don't want to go jumping in here. I don't want to go trying to catch a falling knife or being a hero. I just want to wait for the market to confirm to me that we have indeed found a cycle low and that we're looking to start the next 60-day cycle. Upon confirmation of this, you'll see me add further positions to Bitcoin, Ethereum, and the crypto-related equities as well. So we'll get to the charts in a minute. Just so we're clear, today is day 60, marked by this green arrow here. So are we going to get an undercut? Are we going to get an undercut of these lows, which is the kind of structure you'd usually expect to see? You'd expect to see the cycle low form below all of the local lows before reversing, and that reversal is where we can get long again. Or are we going to just see some sort of double bottom? Because that's what we saw in the stock market, remember. The stock market so far has just provided a double bottom. This was a slight undercut, but we're talking just a couple of points. So are we going to get a double bottom in Bitcoin, just like we've seen in the S&P 500? Or hopefully we can get that undercut, and that would be nice as well. I'll come back and do the charts at the end, as always. But first, a little bit of Bitcoin news, a little bit of inflation talk, because tomorrow, of course, is the US CPI print. And as of yesterday, we got a little bit of sad news. A OG Bitcoin exchange, Bittrex, has had to file for bankruptcy, and this is likely a win for the SEC. The SEC went after them, and unfortunately, they have not been able, at least at this stage, to survive the SEC's attack. Coinbase, however, bucking the trend, Coinbase is fighting back, and Coinbase is now considering establishing an international hub in the United Arab Emirates. So one win for the SEC and likely one loss for them as well. Of course, the biggest losers here are the US, unfortunately. If you do not provide reasonable and accommodative regulatory frameworks for your crypto-related businesses or any innovative technology businesses, then of course those businesses will just leave and go somewhere where they are going to be treated better, such as the UAE in this case. So half one tomorrow, UK time, we've got the CPI print due out. And you can see here, they've currently got the forecast right in line with last month's readout at 5%. Now, Trueflation has us at 3.88% in the US. This CPI print, in theory, should be a non-event. But the question is, does the market know how to interpret this data? Jordan here absolutely nails it. He says CPI and PPI month over month should show increases this week. And this is simply a result of the way the calculation is determined on a year over year basis. But the big question is the market forward looking enough to understand that it's likely just a bump in the road, as energy has since come off? We've seen oil come off, we've seen natural gas get hammered. So is the market forward looking enough to price this in? Or does June begin to price in additional 25 basis point rate hikes? So it'll be really important once we get this CPI print to make sure that we keep an eye on the target rate probabilities calculated by the CME. If this, which is currently 83.4% probability, as you can see, starts to reprice from a pause in rate hikes to another 25 basis point hike, if we start to see the probability leave the left bar here and enter the right bar, then we will likely have to adopt a more defensive posturing. As it stands, for comparison, the yellow on the left here is the 2022-2023 rate hiking cycle. As you can see, this is the most aggressive, most rapid onset of interest rate hikes the world has ever seen. And to put this in perspective, If we go to 1.5% here, it took just 3 months to go from 0 to 1.5% for the Fed funds rate over the last rate hiking cycle. But comparatively, it took 5 months, 7 months, 10 months, and 30 months to reach that level before. You can see it took 5 months to go to 3% in this current rate hiking cycle versus 10 versus never getting there versus never getting there versus 15 months versus never getting there. So this is by far the most aggressive rate hiking cycle the world has ever seen. All logic dictates the Fed should be backing off. The Fed should be holding its hands up, telling everyone that they're going to have to deal with slightly higher inflation, but inflation is coming down, and it's better to have 3% inflation rather than see all these banks blow up. But we are getting to the point where it's starting to become hard to speculate anything other than this is a controlled demolition. I would not at all be surprised to see this continue to be hiked up whilst they continue to blow banks up and transfer these massive amounts of banks into the big four. It's of note that we're less than 2 months away now from seeing the launch of the Fed Now CBDC program, which is not a true CBDC because it's not on a blockchain. It's not a blockchain-based central bank digital currency, but it does have all of the control and all of the darkness associated with the CBDC because it will be a direct government line from the central bank to your money. So I ask again, is this a controlled demolition? We get to find out soon enough. If we move to a pause in rate hikes, if this yellow curve here flattens off, then I do still believe we will see a melt up, a blow off top, a front running of this pause before their cutting cycle onsets a massive decline and a huge deflationary bust that likely does culminate in the launch of CBDCs and a reset. Anyway, for now, one day at a time, let's not get too ahead of ourselves. Let's see what the CPI print says tomorrow. Let's see if the markets start to reprice towards another 25 basis point hike. And of course, if they do, then we might have to adopt a slightly more defensive posturing. The dumb money is currently leaving the market. As you can see, the red declining rapidly. Retail is very, very bearish, as evidenced by the current sentiment polls. You can see record bearishness of late. However, in blue at the bottom here, you can see the smart money is entering the market. Institutions, the smart money, the educated investor are entering the market at the moment. So this tells me I would rather be on the smart money side of the trade than the retail side. And currently I am, as I'm long the S&P, as I'm sure you know. So moving into the charts, we likely have a day 37 cycle low. We have, however, yet to confirm this as a new cycle. The confirmation of a new cycle would be taking out the local highs set before the cycle low. So we do need to see the price move above these highs for me to be sure that we have indeed got a new cycle in play. All the while we're below this local high here, then we have to be open to seeing another plunge down and this not being the cycle low. Now, I don't think that's the case. I think what we're going to see is this move up here, confirming a new cycle. And then what we will need to be keeping an eye out for is that we don't roll over and take out that low. That would be significant structural damage, and we don't want to see anything like that. For now, though, we're long, we're strong, and we'll see what the market can give. The NASDAQ is pushing up. So happy days there. Not much more to say about that. The Dow Jones as well, as you can see, still on its way up out of this swing low. So things continue to look constructive. The VIX, not yet speaking to a volatility event, as you can see, still looks very much like this green squiggle down to the low teens is in play. Now things can change and they can change quickly, but they haven't changed yet. We've still got Apple working its way up. Now there's going to be some natural resistance in this neighborhood, as you can see, just by looking left, you can see there's certainly going to be some resistance, but all the while we're above this upward sloping blue support line, no problem pushing this long. Nike, still kind of a boring trade, isn't it? It is slowly working its way up. So hopefully we can get a push off here. All the while we're above the blue upward sloping support line. Again, no reason not to push this trade. Here's IPX. So again, free trade signal. I've been calling this out and letting you know they was likely going to break out today. So far, so good. Now I want to see a daily close above this. I want to see this close above this downward sloping blue resistance line. And then I'm going to put a stop somewhere either below these lows here or below these lows. We'll see how it goes. The dollar, still range bound, isn't it? So it hasn't lost these levels yet. Probably waiting to see the CPI print and then we'll get a reaction. Whether that reaction is up and then down or straight down, I do expect us to be on our way to the 90s before too much longer. Bitcoin is telling us, like I said at the start, that we're about to find this cycle low. Now, I don't know where it forms, and I'm open to seeing it very, very low down. I could see it being all the way down at 25-ish, which would be the top of this range breakout, and I would not be surprised. It's not my high probability case, but we can come all the way down to 22.5 for a touch of this upward sloping red support line and still maintain bullish structure. Now, will it get all the way down there? I doubt it. Likely, we're going to see it form somewhere between where it is now and this 25.3 level, in my opinion. But we're on day 60, so all we got to do now is look for a swing reversal, and then I think we can get long again. We can add to positions, and that includes all of the crypto-related equities and Ethereum, like I've been saying. So here's Ethereum, currently working on breakout retest, hasn't resumed off yet, but if it can, then that can be a long from me as well. The crypto-related equities, here's Coinbase. So possibly going to be looking to add once Bitcoin's found its cycle low on a trend line break of this. The long will look something like this and a stop below these local lows. So expect me to go long Coinbase if we can get a breakout and find that cycle low for Bitcoin. MicroStrategy, again, this is probably going to end up being an add. The question is, how low down does it come whilst Bitcoin is finding that cycle low? But we've got our line in the sand, break out above this downward sloping blue resistance line, and that can be an add, and we'll move the stop up somewhere underneath one of these swing lows. The same is true of RIOT, isn't it? You already know the deal. So we'll move the stop up, we'll add on a trend line break, and we'll go again. And Marathon looks to me to be breakout retest, looking for that resumption. So a nice entry coming up. If we can just be patient, just wait for confirmation. Because the thing is, I know some people will be saying to themselves, well, if it's a cycle low, let's just buy here. That's fine. Look, you do you. You can dollar cost average. You know, this channel is not for me to tell you what to do. But experience has told me, just in case you're wondering, why don't I buy now? If I'm confident the cycle low is going to show up in a couple of days, why don't I buy now? And the answer is simple. There is nothing to stop this market absolutely plummeting like this. This could happen. Okay, so I don't want to be buying here and just assuming there's a cycle low. I should at least wait for a reversal to start forming, for a swing low pattern to get in. I would rather be slightly late to the trade and get a slightly higher entry price than risk getting in here, assuming because we're on day 60, this will reverse, only to see the price plunge all the way down here. Now, again, I'm not saying it's going to go down this low. I don't think it's going to go down this low. Like I said before, I think we'll end up forming the low somewhere between where we are now and this yellow line here. But like I said, I don't want to go stabbing in the dark. I don't want to be catching any falling knives. We'll wait until we see a nice confirmation of a reversal, something like this double bottom in the S&P, and that will give me a nice level to have invalidation for, and that will give me a nice area on the chart to manage my risk from. Lastly, I want to call this trade idea out, and I know XRP is not a very loved token, and I'm not here to try to convince you that you should have it or anything like that. All I'm saying is we are currently doing exactly what I thought we would. We took this trade at the breakout here, and then we got out somewhere, I think it was around this neighborhood. So we locked in about 16% profit on this trade. We were trying to push this trade because when it goes, it really goes. If you know about XRP, then you know, right? But the thing is, the reason I want to flag this is not as a shill, not because I think XRP is the best coin ever or anything like that, but just because I think this setup is amazing. I think what we're going to see is a continued compression underneath this red resistance line, this red downward sloping resistance line. And then I think it's going to break out from somewhere down here, anywhere between, I don't know, 34 and as low as 20, I guess. I think it's going to get down into this neighborhood and break out. And when it does, and this is not the first time I've told you this, but when it does, I want to make sure that I am there to capture a long, because I think when it breaks out, it's going to do massive, massive numbers. So it will be like the third time I've tried this trade. I think we took this initial breakout here and then got out. I think we took this breakout here and got out somewhere here. But I think if it can compress all the way down here, then I would not at all be surprised to see this thing really explode on a trendline break. So this is another trade setup called out well ahead of time. We're going to need some patience to get down here. I think this trade, as you can see, I mean, this is just an arbitrary squiggle, but this would put us a few months away from breaking out. But whenever we do break out, expect me to tell you I'm going long for XRP. So there you go. Just another free trade signal for you, called out well in advance as always. So that's it from me today. I hope you enjoyed the episode. Like I said at the start, throw any sort of comment down, just make yourself known if you want to be included on the OG list. I have already got a list, like I said, but if you are one of the people that watches and never really comments, then make sure you make your name known. Otherwise, I will not be able to include you on the list. In the meantime, let's look out to CPI. Like I said, let's take it one day at a time. Look for those swings in the cryptocurrency world and try to confirm that cycle in the S&P 500, because like I said, until we can get above this high, we can't really say we've got a confirmed cycle in play, but I am confident that is going to happen over this week. In the meantime, look after yourselves. I hope you're doing well in life. Take care from me. All the best. Cheers. Bye.